This
I
conference
need
will now
to
be recorded.
use our debit cards for everything. Why not use it on a MasterCard to make the payment anyway? So what I have done is instead of using my available ready cash, every time you use your debit card, that cash comes out immediately. Well, let me put it on my MasterCard instead. And a lot of these cards now have rewards. In the Discover card, they give you, I think it's like 5% when you go to groceries. They have these campaigns every 3 months. And you can get a reward up to $1,500. Well, that reward can go against your payment. You don't have to take it in cash. They'll allow you to apply it to your actual credit card payment, which is great. I've done that. I've had $300. I go, okay, here, go towards the payment. And so I'm constantly using it, and instead of putting my available cash out, paying for food or groceries or clothing or whatever it is, I put it on my credit card, and then I make the payments to the credit card. That way I still have available cash, and I just make it doesn't matter. I'll pay $100 or $200 or $50. It doesn't matter. As long as you're paying something and you've already covered the minimum by the time the date that you are supposed to make your payment, you're good. So that has been my habit, and so next I just increased up to 11,000 in the next couple of months. I'm going to increase them again. My target is to get as far as I can. My immediate limit is to get them to is 20,000. So I'm on track for this year to get them to 20,000. My ultimate goal is to be at 50 to 100,000, and we'll see how the year ends up. But I hope I've been helpful. If you have any questions, I think I'll open up the lines now. You can ask me any question that you feel free in accounting to my email.
So if anybody has any questions, you can ask verbally, or you can type in the question, and I will repeat it out loud for you. So either way, whatever makes you happy.
So I should also mention when I met Pascal, he had a little bit of a tax issue, and so he needed to have some tax returns amended. And because the previous person didn't file for it, I don't remember too clearly, because it's been a while. This was back in 2006, I believe. And so we got him straight, and he's been current and on track, and it's been so beneficial for his own credit moving forward, and just keeping everything straight with the IRS, franchise tax board, and with his own business, knowing where she's at, and being able to deduct everything you possibly can in your business, whether it be self-employed or a corporation.
So I have a couple of questions for you, and actually, first, can you give out your information again? There's a young lady that asked for it. She didn't hear it clearly.
Absolutely. Yeah. So again, Denise Ayuso, AYUS as in Sam O. Phone number is 310-612-1739. That's my cell phone, and you can leave me a text or leave me a message if I don't answer. I may not recognize the number, so just leave me a message and I'll give you a call right back.
Okay. So one of the things I wanted to, Denise also learns from an individual that I think he does, I forgot what it is, $6 million a month or something like that? John? Something
John
crazy.
Shin?
Yeah.
John Shin. Wow. I think he's at the minimum, he's at $6 million.
So Denise gets training from this gentleman by the name of John Shin. That, you know, she deals with him directly, talks to him, so on and so forth. And this cat is doing $6 million a month in the insurance business and some other stuff that he does. But, you know, which is crazy figures to me. $6 million a month would probably make me a very happy person. But one of the things that, or there's a lot of things that he's taught her that I find interesting. And you tell them, and you should do this under your business. So everything that we, not everything, but a lot of what we're talking about is, starting to shift. Once you get your personal credit to a certain point, excuse me, you should start to shift and start doing things, living your life through your corporation and or LLC, preferably corporation, in my opinion. But tell them about the car thing, the difference in taxes between like California. I know people live in different states, but the whole car thing, about, how, having your car registered in another state, where you're paying like one time, or, that whole thing, if you wouldn't mind.
Absolutely. Sure. As you mentioned, John Shin, I met him a year ago. He is tangible to me. I am part of his organization in the financial services. And it's perfect because it goes well with my accounting business. And so I've added that as one of my portfolios. So I don't close myself off to one business. Do not put your eggs all in one basket. Always diversified. We've seen the government shutdown. You work for a government job, you get no paycheck when they decide to play games and with you, your life, and there's nothing you can do about it. And you have to step into your savings, your 401k that has penalties. If you have to grab hold of your 401k or an IRA, if you're under 59 and a half years old, you will pay a 10% penalty for federal and a 2.5% penalty for the state, which is crazy because it's your own money, but that's the rule. So going back to John Shinzy, he's taught me a lot, and it's been amazing because the stuff that he's taught me as an accountant, I never learned the rule of 72, and just how to double your money versus putting your money in the bank and getting 0.01% if you're lucky to get that. And you put your money in your stock market, and the money, if the stock market goes down, your money goes down. And God forbid you should have an emergency and you have to take it out at that time, you are now suffering a loss. So a lot of people had to do that as well. And so lucky that the markets have been fairly decent, but just in December, went down 500 points. So it's significant. Moving forward to the DMV fee. So here in the state of California, period, we pay the most taxes in everything. We buy a car, there's emissions tax. We get gas for our car. There's a federal tax on our gas. We pay sales tax, 10%, roughly 9.75 in some areas and 10.5 in others, like El Monte. For sales tax. Then we have income tax. Then we have state tax. Then we have to have business tax. And we're just and we have the highest cell phone taxes as well. That's why they ask us, where do we live at when we go to turn on our cell phone? There's another tax that just escaped me, but we just have taxes all over. We pay the highest tax anywhere in the nation, outside of probably New York and San Francisco. Still, again, in the state of California. So in this, what he has found is you can register your car, and this is being in a business. You can't do this personally, but in a business, register your car in the business with Montana. Yes, the state of Montana, LLC.com, I believe, is the website. If not, I'll give it to Pascal, and he can hand it out later. But there, you pay DMV fees one time. Now, you have to register a corporation there. It's $800. Now, I have a Lexus, and my registration fees are $350 every single year. So, if I paid $800 for Montana LLC, and a transfer fee for the DMV fees, then pardon me, where I'm going now. Then I just have to pay it once. I don't have to pay for emissions or the small checks or the DMCs every single year. You pay it one time. And as we get older, just to let you know, money becomes scarce. It's becoming that way now. We've got to preserve as much money and pay out as little amount of money as possible. We need to save our money. Why? Social Security is not going to be around for us. Okay? If you go to their website, it says in 2016, okay, 3 years ago, in 2016, we were running out of money. We cannot sustain the amount that we're going to have to give out. So by 2037, and they keep changing that number, I think it's now 2034, but don't quote me, go on the site, we'll have 77 cents for every dollar that we have to pay out. Well, that's 2016 this thing. That's about 13 more years around about to retire to get my, which I'm not counting on living on, because you cannot live on that anymore. It was meant to be a supplement, not to live on. So that Social Security, you're not going to be able to use. So we got to preserve our money. So John Shin tells us all this information. He's a great mentor of mine, and he lets me know different places where I can put my money, different places where I can save, and one of those is the Montana, I believe MontanaLLC.com, and I think her name is Patty there. You can go on the site, you can read all about it, and it has a frequently asked questions, and you'll ask, okay, well, I don't drive in Montana. No, but your business is there. You can drive wherever you want. And I'm driving in the state of California, and then someone asked me, well, you know, when you come from out of state, you must transfer your DMV over in the matter, I think it's 10 days, or you get a hefty fine. Well, it's not you personally, it's your business. So, as the employee of the business, the shareholder of the business, you're just driving the company car. So, if you do a traffic violation, they cannot give you a ticket for having on-street license plate. And so that's another way to save, you know, a few $100s every year. And you can put as many cars in a one LLC. You do not have to open up an LLC for every car that you have. That one LLC has multiple. So that has 16 cars. He's a millionaire on his way to become a billionaire. And very tangible and helps us, and for free, pretty much. So he gives us this great knowledge. And moving forward, the other thing you want to know also, hopefully that's beneficial for you, for the DMV that is mine. I'm going, my car will be registered in June. I'm going to have my Montana LLC, and I'm registering my car in there. So every car that I've already paid for, might as well just let it slide out. And then when it comes due, the next car's going to go there, and the next car's going to go in there. And because I'm just tired of giving my money away. We work too hard to give it to the billionaires that are in office today. I don't deserve our hard-earned money. Now, we need to give some money because we need to run the country, and that's part of us living here. So that we got to pay our fair share. But just to give it away, no. So also in your corporation, a lot of things we don't think about. We run our businesses and we don't think about ourselves, right? So one day someone asked me, Lisa, something happens to you, who would take over your business? I was like, wow, that's a good question. My mom is not capable. My husband doesn't want to do it. My kids are too young. And who's left? My brothers and sisters are doing their own thing. They would just die. So, and if that happens, there's no income coming in. Are you protected? It's not just your business being protected. We need to have the insurances for our business, workers' comp insurance and medical insurance for our employees, and we do all these things. But we forget about ourselves. Please don't forget about yourself. Because there's so many things that are happening in our world. So we talk about accidents. People could be at school or at a coffee shop and things happen. You never know. You never know. And it's not about just dying. It's also about if you have an illness. There are now insurances even life insurances that will give you a major amount of medical, of insurance that you don't have to die. You get a heart attack. You have a terminal illness. You have chronic illness. You have a critical illness. You have cancer. You have a stroke. You don't die. What do? You now have to take care of yourself. That means you cannot do anything in your business. But how are you going to get that income? There are some businesses that are just automated and the income just come in quick and slip off. Businesses that you have to go service. I have to go service. The businesses that have products. Your employees, you can have your management, but they still need you. And you can't even get out of the hospital. There are insurances that will pay up to 90% of your insurance policy. Right now, I have an insurance policy of $750,000. If something happens to me and my business suffers, well, I have $750,000 to tap into. And so, even though I have $750,000, I can tap up to 90% of the $500,000 in my policy, leave the $250,000 just in case my illness turns, and I have that to cover me, cover my business, cover my family, my mortgage, all these things. Because why? When the government shut down, the government offered the people a loan. So the money that they owed them at 9% interest, just to add injury to insult. They didn't say, here's a loan, and for 30 days, 60 days, 90 days, or however long the government shutdown is going to be, you don't have to pay anything but at least to survive on this. No. Take a loan on the money that we owe you, and you still have to pay 9% on it. Ridiculous. So, protect yourself, protect your business, protect your family. If anything, one of the best insurance you can get, and yes, you have to qualify. But because we're living longer these days because of modern technology and medicines and advancements, we are living longer. At my age, I'm on track to live to 85 to 100. Our kids are on track to live 120 years. If you think that's false, Google it. It is not. Google the first person that will live for 1,000 years old. So in our business, we have to protect ourselves. We have to get the proper insurance, and you've got to plan. That's another thing that we fail to do in our businesses. We need to plan for that long term and make sure that you're covered. And the main part too is get a mentor. We can't do this all by ourselves. You have Pascal who does the credit. You have me who does the accounting. I have my John Shin who does the financial insurance part of it. Get a mentor wherever that is. And we can't do it all ourselves. We're not best at everything. That is why we have, you're not going to go to a doctor because you have a tax issue. They just can't help you. And vice versa. So, align yourself. Find that person. Sometimes it's difficult to find the person that you can trust, but look out there. Find that person that you can trust. You need an attorney. You need an accountant. You need an insurance. You need a doctor. These are very critical when you have a business that you need to align yourself with and make sure that you have the right people in place. If something should happen, you're able to just give that person a call and things will be taken care of. We're good at what we do. Let the other people who are good at what they do help us be the best overall in our business and in our own personal life.
So I have a question. I have a question, Dee. So what do you think about those individuals that have their corporation, and every time they go on vacation, they take the corporation's employees, which can be their wife, their kids, their whomever, and it's all a tax write-off when they go on vacation. So what do you think about that? Because they have meetings while they're on vacation. So what do you think about that type of thing?
The company function is great because it is 100% taxable. This year in 2018, meals are no longer deductible. So instead of paying for a meal for someone that you're doing business with, they'll get a gift card. That's deductible. Tell me what the rules are, and then we'll make it happen. So, and that was told to me by my tax professional that I take once a year. And so meals are not deductible for 2018. Moving forward, no longer deductible. So get a gift card and use that instead. Travel expenses. Many people have different ways of dealing with travel expenses. Some people have property in a certain state, so they'll go have a seminar in that state, and then they'll check on their property, and now that's 100% deductible. Creative. I thought that was great when I was told to me. And I was told by a CPA who also has a legal degree. But if you take your people on a vacation with you, company, all of it is deductible 100%. It's company business, company function.
And so the other thing that I wanted to ask you about is, so I've known of people, what they do is they will, to start offsetting their expenses overall for their business, what they will do is they will say, well, you know what, I pay my child is under 18, they're still a dependent of mine, but I'll pay them up to whatever right before a taxable amount. So I don't know what the numbers are, but let's just say if it's, you know, $8,000, well, over the course of a year, I'll pay my child up to $8,000, and for doing whatever chores I need them to do. You know, concerning the business. I'm sorry?
That's a great question, yes. So another thing you can take advantage of for if you need deductions is hire your kids. You can hire your kids as young as 10 years old. You can pay them a reasonable minimum wage, $10 for the hour, and they can shred. Create a little timesheet for them. On this day, they shredded. On this day, they golfed for me. On this day, this day. Who's going to check? Are they going to come and interrogate your child if you're ever audited again? Either beings only if you're ever audited. Okay, I'm not telling you to go and do something wrong. I'm not. But many people have taken advantage of the maximum you can do under the law. It doesn't state that you cannot hire your child. You can. You can't have child labor. So pay them the minimum wage, whatever that is. In our state, $10, I think it is, or $11 now, January. In some areas, $12. But you can pay them up to a certain amount, and I believe it's $6,000. And you can still deduct it on your tax return. You say, yeah, but you do have to prepare a 1099 for it to you be able to deduct it. Will they have to file a tax return? Yes, it's a little simple tax return. And possibly not, because if you're under a certain income amount, you don't have to pay. There is no tax due. And if you don't have tax due and you don't have a refund coming to you, you do not have to file that tax return. So you can deduct them. So I give my kids a couple $100 here or there for whatever, expenses for the school, dances, their meals, whatever it is. You give it to them in the form of a check, or you deposit it to their ATM as long as you have a description on it, on the receipt to get back, paid myself, $200, what for the month, whatever it is. And at the end of the year, collect what that amount is. Make sure you don't go over the amount, and you get to deduct that. You know, now all this money that these kids are in your pocketbook, as my kids love to be these days, and with all the electronics they like to buy and the video games and everything, have that deducted. It's a great source of deduction. And the other thing I'm going to say too, which came to mind, don't commingle. Do not put your personal funds in your business and your business funds in your personal. The banks allow you to do that. They'll let you put a personal check as long as you're writing, endorse it in the back and put it in the ATM, and they'll accept it. In the past, it used to be like that. Now they allow it. Well, if you're audited, whoever are the payments to any deposit, they can now have access because you've commingled. They have access to those funds as well. You don't want them digging in your personal. As much as possible, keep it separate. Keep it totally, as much possible separate. A little. And two, if you don't keep it separate, and because the IRS is eating your personal account, and that's why you use your business account, that's another issue. But try to keep as much possible separate. Corporation, business is one bank account, your personal is another bank account.
So one of the other things that I wanted to, ask you about, obviously I have many, but is when you're doing your taxes, right? And this has to do with credit. So when you're doing your taxes and you have your personal credit cards and then you have your business credit cards, what do you think about a person that runs their expenses, business expenses, right? With my fingers doing the quote signs, running it through your business instead of your personal, because you're not going to get any write-offs on your personal. So that's why it's important to have business credit. Is that not correct?
That is correct. In the meantime, while you're trying to establish your business credit, you're going to have to use your credit card. So once you have your business credit, you want to buy certain things, and what you'll do is you'll put those items that you've used your business card for personal in a separate account. Those things are not acceptable. For example, if you go to Macy's and buy brushes or suits are deductible for your business, by the way.
I'm sorry. Say that again. Suits are deductible.
Yes, if you're in a professional business that you have to present yourself in a certain way, they're deductible.
So if you're a consultant or a bookkeeper or you're a salesperson for your business.
Exactly. You have to dress a certain way. You have to look a certain way. Oh, you have to be in T-shirts and jeans and tennis shoes all day. My profession doesn't allow it. I can't come to a business that's doing $50 million in T-shirts unless it's a Amazon or Apple. It's a whole other story. They dress differently there. That's IT, but in a professional, legal, accounting, consulting, that type of business, insurance, you have to come dressed a certain way. You have to come in business attire. I have to buy certain clothes. I have to, or else I'm not going to be in business. They're deductible. So going back to your question, you can use, to start establishing some personal on your business card. Those things are not deductible. However, you handle them, how you handle them. Now, while you're establishing, you have your personal card. Can you put your business up on your personal card? Yes. You take your statement, you highlight your business part of it, and you enter them in your records. And what that ends up being is that money is due back to you from the corporation. The corporation now owes you money for putting business expenses on your personal card. Or you can do it is you have the business pay your personal card for those expenses. So you have two transactions. You take a check from your business, get a credit card with that, or online, however everyone does it these days. And then the other portion of it, and you pay personally, and that's how you do it.
I hope everybody on this call is understanding that. Whether you realize it or not, Denise is dropping jewels, right? So all these little things, I'm telling you, they're powerful, more than just a little bit. So I hope that that information is going into your head and it's registering with you. And if not, you need to raise your hand, ask a question, or whatever the case may be. But yes, go ahead.
Earlier, she'd mentioned a software to use when starting the business to keep everything in line. What was that software again?
Did you hear the question, Denise?
I did, and it was kind of muffled.
Okay, sorry, because the way I had to rig it, since you couldn't come on the call properly, I had to kind of put my two phones together basically to make this work out, and that's why people are saying it hasn't been as clear. But anyways, the question was, what was the software you mentioned earlier that a person should use when they're first starting their business?
QuickBooks.
QuickBooks.
And you can get that at any local. You can go online at intuit.com, INTUIT, intuit.com, and they have QuickBooks there. They have TurboTax where you can file your tax returns as well. You can buy it at any local office supply. I want to caution you something about QuickBooks, though. In the technology world, everything's going online, and so they have an online version. If you're first starting out and don't know much about accounting, I don't recommend it. For me, even I've known QuickBooks since 1992. It's cumbersome. It's not. It doesn't flow very easy. Harder to train people on it. I just don't care for it. It looks nothing like the desktop version. Your desktop version has icons. It tells you if you want to write a text, click on this icon. If you want to enter a bill, click on the icon bill, and the thing pops up, and you just enter the bill. If you want to enter the transaction in your register, click on register. Very simple, easy process. On the online, you have to search for it. You have these drop-down menus, and the wording is different. And they just didn't keep it simple. And I called them and I said, hey, what happened? Why didn't you just transfer over the same look? Well, we wanted to do something different, but agreed with me that it's not the best software. So there, since 3 years ago, or maybe it's been 5 years since they've had it, they've been improving. It's just not there yet. So I don't recommend the online version unless you have QuickBooks for a while and you're going to have difficulty maneuvering in it. I've talked to several accountants who train people or bookkeepers, and they all say the same thing. So I would recommend the desktop version, and then later on transitioning. The good thing about online is that no matter where you're at, you can tap into it. Well, we have PC Anywhere, and PC Anywhere, you can load up the software and tap into that computer, and now you have access to your system. So there are other ways, if you're on the go, to be able to access your accounting. So Intuit.com, and they have QuickBooks if you wanted to purchase it online real quick, or you can go to your local office or Staples.
Okay, did that answer your question? Were you able to hear what she said? Go to Intuit.com, and then you can purchase QuickBooks for your business. Hello? Okay, well, it doesn't matter. Anyway, so hopefully they got that.
And either you can pay one fee, or you can pay it all outright, and I believe it's, I don't know, $175, might be $200 now, it depends. I would stay away from, they have these specialty softwares, like if you're a contractor, or if you're in service type industry and you're a nonprofit, stay away from those specialty QuickBooks. They're exactly the same as QuickBooks Pro or the regular QuickBooks.
So basically, just buy the regular everyday QuickBooks and stay away from the online version. Get the hard copy, basically, that you have to upload into your computer.
Correct.
Okay. All right. Did anyone else have any questions?
And QuickBooks also allows you to do payroll, do your W-2s through there, file your quarterly reports online if you want to do them yourself, and 1099. If you're not familiar with the different tax laws, because you're having to do federal and state forms, taxes, there's different percentages, and there's table rates. Just go to ADP or Paychex. They're just as good. It's $90. I think a run of a payroll. You're better off using a service than trying to do it yourself. You get in trouble because one thing, payroll taxes you cannot get away from as far as walking away or filing bankruptcy. You are personally liable. Why? That money is not yours. That money is your employee, and they are not nice about it. So the penalty there is 35 to 40%, and they can file civil penalties on you personally. So if you have assets, they can take those. And let me tell you, you cannot run away from those. Well, I can transfer them in someone else's name. Maybe it's back 3 years. If you've transferred anything in a 3-year period, doesn't matter. It'll go after it. So you're not protected there. So do yourself a favor, spend the money well worth it, than to get yourself in income tax IRS issues. Not fun. I have a couple of clients that are going through it. My tax attorney is taking care of them, but the penalties are swift. So taxes are due. One of those you do not want to miss. Pay the taxes. And the payroll service has to do it for you.
Yeah, I can attest to the tax thing. Like with one of my just paying the state franchise tax board alone on one of my businesses was not good. It was I think I had to pay them approximately $4,500 because I let something lapse, and then they charged me. It wasn't the $850 a year. It was all the freaking fees that they charged me for letting that business lapse. Lapse, I should say. One of my issues is I have multiple corporations established, and so I don't keep up with everything as well as I probably should. So yeah. Anyways, try your best to pay the taxes. Maybe eat out less or something, so you can make sure you get that taken care of. So another thing that I wanted to ask you real quick, Denise, is you were saying something about the you and I've had these conversations before, but the Key Man Insurance. Kind of go over the Key Man Insurance thing, if you would, for people with businesses.
Perfect. Yes. So there are a couple of types of insurances, and the one in particular for the business is the Key Man Insurance. And what that does, it's like a term insurance. And let's say you're in business with someone, a partner, or multiple. But let's say you have one partner, and you're good at running the business, but that partner brings in the sales. I have a client right now. They're 50-50 owners of the business. One does the sales and one does the operations. Perfect scenario. And but even though the person who operates can do sales, he's not that good at it and doesn't like doing it. He has a great sales guy and his partner. Now the partner doesn't like running the business, the day-to-day operations and the paperwork and the minutia, and that's why they keep me on board. But he could still run the business because he could just hire an accountant or secretary or administrative staff person to continue the business if his partner passed. But on the flip side, if the partner who's running the business, his other partner, the sales partner, pass away, he's kind of screwed. This is a $5 million gross income company, and it would hurt them immediately. So the Key Man Insurance allows you to have insurance on your partner in case of an incident where he or she passes away. Now, you got $1 million, $2 million, $5 million, depends on the need of the business and the growth income and the destination for it. But if that person passed, you need to have $1 million to work with until you can replace that person. Because it's going to take you a while. It doesn't happen overnight. You may have to run through a few people. And so you don't want your business to suffer. You want to continue to keep going. So the Key Man Insurance allows you to do that. Not only that, yesterday Now, this other insurance, the buy-sell agreement, okay? You want to have that insurance because why? That person passed, your partner passed away. You like doing business with him, but what about his wife or the husband who inherits the business? You want to be able to buy them out. You don't want to be in business with them because you can't stand them, you don't get along, whatever the case may be. We have those. Some of you know who those are. Some of us know a person who's in that situation. You may not like who, or the children is inheriting, the business. You want to do business. These are the things we don't think about on our day-to-day until someone brings it up and brings it to your attention. You're like, oh, you're right. And it doesn't cost a lot, and business is deducted. So, key man insurance, liability, it's an insurance on your partner in case a key person in your business. Now, you can have insurance on some of your management, some of your employees. They pass away. They've got a fine because you're the owner of that policy, they're not. And there's been some situations where corporations have had insurance on the employee and they got the money, and then the family's going, hey, they're not ours, and they're like, no. So you got to make sure that you have an agreement that it's clear that that's the case. And I would think that the company would step in to be given something for cost. But hey, that's a whole other conversation. But it covers. So if you have a key person in your business management that that person left, or not left but passed away, it can hurt your business. So you may want to think about that as well.
And that key person could also be your spouse.
It can. It can be your spouse.
So if something happens to your spouse and they're yeah.
Yeah, it says key person, and that's the key to that. If any person, it doesn't matter the relationship. There is no relationship there. It's that key person in your business.
Absolutely. So does anyone have any questions? We are 10 minutes past. We went a little long because we started 6 minutes late. So if anyone has any questions, they need to get them in now. And if not, we are going to wrap up this call.
Well, it's been a pleasure. If no one else has a question, I apologize if my voice sounds monotone. I caught a little bit of a cold. Went to a conference in seminar rooms now, just I guess the air conditioning and all that recycling air just kind of got to me. So I apologize for my voice this morning. But I am excited, and if anyone again, and it is Denise Ayuso, for those who may have come on the call late, AYUO, and my phone number is 310-612-3739. If you have any questions that you may have not asked on the call, or you may think of later, because I happen to, I'll be available to answer any questions up until noon today. You can text me or give me a call, and I'll be more than happy to refer you to any of the topics that we have discussed. I'm involved in real estate. I'm involved in accounting. I'm involved in insurance, financial services. And the last thing I would say, our kids too. We need to protect them. We need to get retirement policies in place. There's not going to be right now 76% this government shutdown. They're realizing they're 2 paychecks away, or even a paycheck away, of being homeless. And so we really need to start putting our monies in vehicles that are going to protect us. That when we take them out like 401k and IRA, we're not taxed more than the benefit of the deferred tax. That, and I know I might be getting too technical, but when you're doing those types of accounts, you get a deferred tax benefit, meaning you don't have to pay tax now, you pay it later. Well, is your taxes going to be higher or lower later? I did a scenario where someone was putting $200 in, roughly about $200 into an account, and 30 years later, they're paying 3 times more than the tax they paid. Doesn't make sense, and that's why Roth IRA came about? Well, there's limitations there. You still cannot take it out before 59 and a half. You get penalized with 10% here in California, and we have state taxes. So state wants to get there 2.5%. So now 12.5% just came out of your account. You're not going to get that. The IRS and the franchise tax board of California is going to take it from you. And you work too hard to let someone else take your money when you need it in an emergency basis. So there are vehicles that you can put money in. It doubles. Look at the rule of 72. Albert Einstein wanted to find out. Originally, it was for population. And then it came about that he wanted to see in a lifespan of 100, let's just take 100 years, because back then they couldn't span them 100 years, but 100 years, how many times would my money double? Well, he figured out if you take 72 and divide it by your interest rate, so let's take your IRAs that are 4%, possibly 6% gaining per year. You divide that by 72, that's how many years your money will double. So if you have $10,000, double the 20 would double to 40, 40 would double to 80, 80 would double 160,000, and it keeps going. And you keep putting an age on that. So let's just say it's 6%. Your money would double every 12 years. So every 12 years, take your age, add 12 years, put an amount on there, and it will double in 12 years. Well, there's vehicles right now that you can get 12 to 15%, and guaranteed that if the market drops, like in 2008, when it dropped below zero, 40% below zero, you're guaranteed your money will stay at zero or possibly gain 0.75% on your money. And when the market goes back up, you'll be doubling. Or you can put it in an account where it'll lock your money, and whatever happens in the world, your money is locked in. It's not going anywhere. And when you have an emergency, you can take it out tax-free. And when you have an emergency, you can take it out no matter what age you are. So there are vehicles today, things are changing because of technology, because our needs are different today, because we're living longer. Let's put our money where we can double that money. And just think about inflation. Inflation is 2.6%. If you're in a vehicle that's 4%, you're not gaining a lot of money. Here's the other problem with inflation. Does not factor gas, does not factor food. 2.6% is all the other factors. Well, what is that? Not sure. But does not factor food. Well, in the state of California, there's like food shops on almost every corner. And gas, well, we travel in our cars because our state is huge, and they took away our transportation back in the 40s. So we are a nation of vehicles, and they don't factor that. So that 4% is now 1.3, 1.4%, 1.4%, that you're actually gaining on your money every single year. And as inflation increases, and that percentage that you're gaining on your money doesn't increase, you're in trouble. So get the education as much as possible. You can Google all this stuff. You can call me. You can call Pascal. We have a network of different people of where, we're in off the pot and making our money. When we get this credit and we're in line and we're doing things and we're getting our credit in order for me and building my business credit. And when that happens, I want to make sure that I can take that money and put it in vehicles that is going to be there for my retirement, and that it's faster so that it can last for a long time. And that when I get ill, I also have money coming in from those policies, and it's taking care of me. We have insurance on our cell phone. And that was so profound when someone told me, hey, you have insurance on your phone? And I said, yeah, why? Because when you drop it, it cracks. You're going to pay $600-700 to replace it. But yet we don't have insurance on ourselves. Which one's more valuable? We don't have insurance on our car. It's the law. We have insurance on ourselves. That's the law. We don't have insurance, life insurance on ourselves. Should be the law, and it's going to be soon. And with that, I will close because we're taking a long time of your time. And so I appreciate, as you can tell, I'm passionate about this. My mission now is to educate people financially because this country is illiterate. The other countries are teaching our kids in school when they're in elementary. They're learning this stuff. Well, we don't even learn it in college unless that's your major. You need for your major, they don't tell you half the stuff. So let's get educated. A lot of this stuff is for free. And do yourself a favor and just make that a goal for this year. 2019, let this be the best year ever. Get your finances in order. Get your credit. Because there is going to be a next crash. It happens every 25 years. We've already came out of 10 to 12, however, 2008 they call it. So we're at 11 years now. It's coming. And the next crash will be in the 25-year mark. And so we have a few more years here going. And this year, every year, the crash is called something. One was called the .com in the 1990s, 88 to 92. The 2008 that lasted more than 5 years. I think we're still in it, but we keep coming out and going back in, and we're kind of dabbling in and out. That was the real estate market. The next one is the financial market, and you can see it. So you can Google it. It's there. It's real. We're experiencing it. Get yourself ready. Let's stop spending money on the clothes, on the fancy cars, on the TV. Those things depreciate. They do nothing for us. On the shoes, going out to eat too much. You've got to have an emergency fund. 6 months at least. The government shut down for 35 days. That should give you a target point to at least have the amount of money that you're spending a month. And if you don't know that, get your bank statement and add up all the expenses that incurred in your bank account. Create that amount and then triple it. That's your emergency fund. We all have to do it. I'm guilty of one that hasn't done it. I say my husband is my emergency fund and he hates it. So I gotta have my own. He has his for our whole family, but I gotta be responsible too. And so I have started that fund. And every month I put more tips so that it's gonna grow and grow, and I just don't touch it. Emergency means emergency. It doesn't mean, oh God, there's a sale. Whatever it is. And I'm not here to judge. Because what I'm saying, I'm talking to myself. I've been there. I don't want to be there anymore. And it's scary. And you've seen on the news and you've seen those people don't have that paycheck. And how do you pay your day? Foreclosures and eviction, those are real things. Because those things on the other side, even though the landlord wanted to keep the people in the house, they can't. They got to pay a mortgage too. Many of them do. I've been there. So it's scary. So let's do ourselves a favor because no one's going to take care of us except for us. And the government is not the government like it's some other entity. It's us. The government is our own taxes. We pay that. The government is us. People think it's separate. It's not. It's us. The government is our dollars. Without us, there is no government. We're going to fund it. We fund it. So let's take some of those dollars and make sure that we're keeping them in our pocket versus giving it and letting them spend it. So with that being said, I didn't mean to be a lecture, but sometimes some of us have to get a kick on our end, and and a lot of it is that we just don't know. So you can't be faulted by what you don't know. But today, we have so much technology. Ask Siri if you have an Apple phone or an Android. They have their own version. Alexa, ask them. They'll tell you. There are no more excuses. We've got to make sure that we're protected. Our business is protected. You get that credit. Get your credit straight. It is so important. Back in the day, you could have a 500 FICO score, and they would give you anything. Today, it's 640 to 680, and that's considered fair. Before that was excellent. Things are changing, and they're going to change as we progress in the future. So with that being said, it's been my pleasure to be on this call. I hope I haven't offended anybody, but I'm available. like I said, until 12 noon, and I'm sure I'll extend it because that's just the person I am. And so any information, you can get my phone number, you can contact Pascal. I will send, Pascal will send it, I'll send an email to Pascal, he'll send it out to you guys later on for this call, and I'll give you the website to some of the information I spoke about today. And again, whether it be us or someone else, take care of you. Thank you, Pascal.
Thank you, Dee, for coming on the call and sharing your wisdom and knowledge. One of the things I wanted to add real quick is all the stuff that Denise was saying. It's imperative that we all do, but in addition to that, in my opinion, it's also imperative that we build our business credit as well. And I'm going to say the reason why, because business credit, unless you let it go bad, you can literally have 50, 100, a million, several $100,000, whatever. You can have a ton of business credit that's not going to report to your primary credit unless you let it go bad, right? Because you're the guarantor for it. And so my thing is, as part of your game plan, in my opinion, as part of your game plan is just in case, stuff goes wrong, stuff hits the wall, hits the fan, whatever, is having as much business credit as you can possibly get your hands on. Because if things go wrong, right, you want to be able to access as much money, as you possibly can. And I'm not saying this in a what I'm about to say, I'm not trying to say, you're out there trying to defraud anybody. I don't want anybody to think that, but I'm just going to say this. If things go wrong, isn't it better to have as much of their money in your pocket as you can before things happen? Does that make sense? So if you happen to have $100,000, or $50,000, I don't pick a figure, of money in your business, and things just hit the wall, and you can access that money during the time that things are bad, isn't that better than just sitting there saying, oh my God, I don't know what to do. Oh my God, I'm just screwed. Oh my God, you know what I'm saying? Get as much of other people's money in your pocket as you can. That's literally the bottom line. Control as much of other people's money as you can. Pay all their taxes. Do all the things, let me rephrase that. Pay the taxes that you have to. Do the things that you have to do. Get the insurances that are necessary. Talk to Denise about the insurances. Do the things that are play the game, damn it. Play the game the way they've laid it out to play. And if you do that, you will win the game. I mean, I am a student of all this stuff as much as I am a teacher of it, right? So be a student and then become a teacher of it. Because as a teacher, I'm telling you, you will learn so much more, because what I have always found, and I've been taught myself, is that as you go out and teach people, it resonates with you greater. It locks into your head better. So learn this stuff. Talk to people like Denise, and glean as much information as you can, and then go out and start talking about it with people, because it resonates in your brain differently. It locks in a different way, right? So don't just get the information and hold it to yourself. Teach it, explain it to other folks. And with that said, this call is done. We're already at the 10:27 mark. So thank you, Denise. Since we're on the call, I won't call you Dee. Denise, for coming on the call. Greatly appreciate it, love. And yes, and I hope everybody got something out of this. And so next Monday, I don't know who our guest speaker will be, but we'll be back next Monday, 9 a.m. And it'll be the same old thing. All right, everybody. Thank you so very much for the call. This call is now ended. And I'll talk to you a little bit later, Dee.
Thank you.
All right. Take care, love.
Bye-bye.
All right. Anybody and everybody else that's on the line, we will talk to you later.